Understanding buy limit orders. A buy limit order is a type of order used in financial markets to purchase an asset at a specified price or lower. It helps traders control the price they pay and ensures that they do not overpay for an asset. Below is a structured explanation of buy limit orders. Definition of buy limit order. A buy limit order is an instruction to buy a security at a price equal to or lower than a specified limit price. It ensures that the purchase occurs only at the desired price or better. How buy limit orders work. When a buy limit order is placed, the order remains open until the market price reaches the specified limit price. Once the market price meets or goes below the limit price, the order is executed. Advantages of buy limit orders. Buy limit orders allow traders to control the maximum price they pay, avoid overpaying in volatile markets, and automatically execute trades when prices become favorable. When to use a buy limit order. Traders use buy limit orders when they anticipate that an asset's price will drop to a specific level before rising again. It is commonly used in technical analysis and long-term investment strategies. Difference between buy limit and buy stop orders. A buy limit order is placed below the current market price, while a buy stop order is placed above the current market price. The buy limit ensures a lower purchase price, whereas a buy stop ensures entry once the price rises above a level. Setting a buy limit order. To set a buy limit order, traders specify the asset, the limit price, and the quantity to purchase through their trading platform. The platform executes the order when the price matches the limit. Risks of buy limit orders. One risk of a buy limit order is that the price may never reach the limit level, resulting in a missed trading opportunity. Market volatility and sudden price changes can also affect execution. Examples of buy limit orders. For example, if a stock is currently trading at $100 and a trader wants to buy it at $95, they would place a buy limit order at $95. The order executes only when the stock price drops to $95 or lower. Common uses in trading strategies. Buy limit orders are commonly used in swing trading, day trading, and long-term investing to buy assets at perceived support levels or during market corrections. Buy limit orders are essential tools for traders who want to control their entry price and avoid market fluctuations. By understanding how to set and use these orders, traders can enhance their market strategies and manage their investments effectively.